If you are self-employed, you know how important tax planning is. I've got 3 proven tax saving strategies for you that run your own business. I've got that and more coming up. My name is Mike Bernardo, the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. There's something called the tax cash flow doom loop if you run a small business. And here's how it goes, guys. You are focused on growing your business and growing revenue, and that's fantastic. But then as you grow that revenue, you then need that cash to for continued growth, right? To add infrastructure or to buy new equipment or to go out and find new clients. And then when you sit down to do your taxes, you take a look and you say, okay, well, revenue was this, expenses were here. So we had a lot of profits, and therefore we owe a chunk to Uncle Sam. And if you're not planning ahead proactively for those taxes, then that often causes a lot of small business owners, especially early startups, to say, okay, let me scrounge together some cash and I'll pay last year's tax bill. Well, then you say, well, but your revenue, because you've started this business and it's growing, it's on the rise. And therefore, not only do you have to scrounge together cash to pay for last year's taxes, you need to get even more cash ready because you've got to start paying quarterly estimates for this year. And that feels like I'll deal with it when I have the time. I got to focus on growing this business. And therefore, you get to the end of the year, have an even bigger tax bill. You scrounge together taxes. It's even more unlikely that you're unable to get the cash together to pay last year's taxes and start paying this year's estimates the right amount and so on. And so it creates, even though your business is growing and things are going well, you are stuck behind the 8 ball with taxes. Well, how do you get out from under that? How do you own a business? Even if it's a side hustle, how do you own a business that's doing great and yet not have to play this cycle and get behind the ball with taxes? Well, tax planning, that's how. Your financial life is made up of all 6 areas, of 6 different areas, and tax planning is one of them. That is getting proactive about your tax picture and planning ahead, looking for opportunities to manage your tax bill or avoid taxes either today or in the future to pay the least amount of tax over your lifetime. When you run a small business, if that's your full-time gig and you have employees, or if it's just you or it's a side hustle, doing tax planning goes from, yeah, I probably should do that, to I absolutely need it. It's essential. So as a self-employed individual, what are some of the proven tax saving strategies? I've got 3 of them. The first is selecting the right entity structure. Oftentimes, when you're just getting started, people ask the question, well, should I be a sole proprietor or should I do an LLC for taxes? No. The LLC isn't for taxes. The LLC is to get limited liability. And so depending on your operation, yes, you need that LLC to limit the liability. The tax question is, should I be taxed as a sole proprietor, where all of my revenue minus my expenses equals my profit, and that profit I pay federal taxes on, state and local taxes on, and I also pay self-employment taxes on, which is 15.3% on the first chunk of it, okay? That is basically FICA times 2, okay? That's if you're taxed as a sole proprietor. Or do I want to be taxed as a corporation? Typically, people think of an S corporation. With an S corporation, you are paying, you've got your revenue minus your expenses equals your profit. In your profits, you pay federal tax and you pay state and local, but there is no self-employment. And so this is the first idea or consideration when it comes to proven tax saving strategies is, when does it make sense to flip from being taxed as a sole proprietor to being taxed as an S corp? And you might say, if there's tax savings and I can avoid self-employment tax, the answer is immediately, right now. No. Switching to an S corp does involve some cost, some ongoing costs as well as a cost to switch, but it also requires new formalities that maybe you don't need to do with a sole proprietorship. It depends on your situation, but typically when that net profit is somewhere above $50,000 and in many cases a little bit more than that, that's when you're going to want to be sitting down with a certified financial planner, someone that knows your tax picture, is doing tax planning and knows your business and the outlook on it and your financial situation and determine, well, what's that crossover point where it would make sense to being taxed as a sole proprietor and having to pay that self-employment tax, but instead shifting over to being taxed as a corporation, file that S election and avoiding that self-employment tax on your profit. So work with your certified financial planner on that one. That's the first way, proven strategy to manage taxes as a self-employed individual. The second strategy is to capture, even optimize expenses that are unique to small business owners. What am I talking about? Well, one is depreciation. If you are buying an asset and say you're buying some equipment for your business, do you want to get the maximum deduction right up front, or do you want to spread that deduction evenly out over time? Typically, you have a choice. It depends on what sort of equipment, like what you're buying. It depends on what you do. It depends on your overall kind of financial situation and structure as a business. But oftentimes you have a choice to what's called Section 179. So you expense the whole thing. And that often makes sense for a lot of people because they say, well, I bought the equipment, I'm out the cash flow. That should be an expense. Typically, from accounting rules, not all assets can you expense all right up front. And some of them, you've got a choice. Do I want to expense it all up front, or do I want to just take a partial deduction this year and another part next year and the following and the following? Really depends on your expectations, where you stand with income and expenses this year and what tax bracket that puts you in, and then what your expectations are for the next year and the next year and the next year. That's how you have some control and are able to optimize this depreciation deduction that's unique to small businesses. Another one you're going to want to optimize is the qualified business income deduction. This is a relatively new tax deduction related to small businesses ever since the Tax Cut and Jobs Act. And you've got some choice because there's a circular calculation for many industries as to how much qualified business income deduction, QBID, you get. It depends on, well, what do you pay yourself and a few other factors as well. You could get up to 20% of your profits as a deduction through this qualified business income deduction, but you're going to want to optimize that and plan ahead for that, working with your certified financial planner. And then I'll just mention one other item in here, and this is one that we see missed by a lot of self-employed individuals, especially new self-employed individuals, entrepreneurs, that sort of thing, is optimizing and getting the full self-employed health insurance deduction. That's a deduction right on the front page of your tax return, and therefore it lowers your adjusted gross income, helps you on federal taxes, as well as state taxes as well. So there's not much of a decision that needs to be made here, more so just pointing out this unique tax deduction that small businesses get. So that second proven strategy to improve your tax picture or save taxes is to optimize and capture these special deductions available to small business owners. And then the third is to use the right retirement plan for your small business. Oftentimes when people are entrepreneurial and they're starting their business, they think, well, I've got to get this thing growing and it'll create income for me for the future, or I'll be able to sell it for the future. I'm not saving up for retirement right now. That's not a high priority. And I understand that. I get that. You do need to plant as many seeds as possible for your business. And yet at the same time, retirement plans can be a critical way for you to get money out of the business and do so in a really tax efficient way. When we bring that up to folks and they say, yeah, it's about time, then they start looking at IRA or Roth IRA because it's available. There's no extra setup. You can just make a contribution to those. And again, typically those contribution limits are, $7,000 or $8,000 this year if you've got a catch up. And that's just about enough that a young or early entrepreneur wants to do. However, those aren't very big contribution limits. And so working with your CFP to see when it would make sense to incorporate something called a SEP IRA that you can actually do above and beyond a normal IRA or Roth IRA. That allows more opportunity for you to set aside dollars, resources, income, and have a deduction on your taxes. What about a single K? That's a solo 401k where you can actually contribute significantly more up to the normal 401k contribution limits, as well as a profit share. And then if you've got employees, maybe considering a simple IRA or starting a 401k based on some of the tax credits available right now for doing so. So the third proven strategy to reduce taxes as a small business owner or self-employed is to look at your retirement plan options and funding the right ones for your situation. So those are three of the proven tax strategies that you need to work with your CFP on. If you run a small business, own a small business, whether it's a side hustle or the full hustle. Work with your certified financial planner. Ensure that they're doing tax planning and strategizing with your CPA. If you don't have a CFP on your team, you can contact one of my team. Find us online, Korhorn.com. That's Korhorn with K. WiseMoneyShow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.